Hey everybody, it's Lawrence here, and it is a Wednesday evening, not a Thursday evening. So this is technically the Thursday evening stream, but it's on a Wednesday. So thank you for tuning in a day early. If you're not able to watch this, you're watching in the future, welcome. Thanks for joining. We're going to talk a lot about peer-to-peer. I tell you what, it will be a probably a little bit of a short stream this evening because tomorrow I am taking a little operational break for something health-wise. It's nothing super serious, but something I've been meaning to take care of. Excuse me, what's it? Sorry about that. Gesundheit to myself. Got the sneezes. Let me fix the sound. Hold on one sec. Oh dear. Okay. There you go. I'm sure it's probably good that that was a little bit quiet. I don't want you getting the full blast of my sneeze, but yes, I am going to be. Oh dear. A little bit of allergy attack going on. Yeah, I'm going to be going in for a little bit of surgical procedure, not to get too personal, but yeah, all being well, I'll be back next Thursday, and if not, you'll know what happened to me. That could be the end of me, but who knows, right? Hopefully everything will be okay. Thank you very much for the good thoughts and blessings and prayers out there. It's nothing, like I said, serious. Something I actually injured myself several years ago and kind of ignored it and just didn't want to deal with it, but now I have to do it, so all good. So let's talk about a couple of different things. July 27th, we're going to have Unbolted here live. It's been a long time since I've been here, so Ashwin and Chris Brown will both, I believe, be here, if not one of them. Hopefully Ashwin at the very least. And so that'll be July 27th. Again, I'll be back next Thursday, all being well. Thank you again to the sponsors of the stream. Cufflink, who sponsors also the Harley Cam right there. As you can see, she is tucked in, ready to learn about interesting events going in the peer-to-peer world. But Cufflink sponsoring the stream. If you haven't got an account with them, please go ahead, sign up for a free account. You can get up to 9.73% gross per annum interest for the year, and way over 250 million pounds lent now of property-backed UK investments since 2016. Zero investor losses to date. Do remember, please, that your capital is at risk. Don't invest unless you're prepared to lose money. And you can sign up at join.cufflink.com/financial-things. Remember, your money is not FSC protected because this is a peer-to-peer lending investment. But if you get an opportunity and you want to know more about Cufflink, you can also buzz over to their headquarters and just get a ticket like this one to Gravesend, which you can see I got there in June. Just real proof that I actually went to Gravesend to visit them. Go visit Cufflink. Go check them out. You can get some free ice cream too. I always like to go, if I can, to the offices and look them in the eye and kind of find out what's going on. If you could hit that thumbs up too, that would be really great. Subscribe to the stream. I was thinking about investing and peer-to-peer and, thinking about this operation I'm having tomorrow and how really we just focus so much, I think, in our lifetimes about money and accumulation. And sometimes it can be really easy to lose sight of what life is really about. I mean, once we're gone, we can't take it with us, right? And I think the important thing is life to kind of enjoy life and don't be a hoarder when it comes to finances and wealth. I mean, for anybody that's blessed enough out there to be able to do that, that's great. There's a lot of people out there who are really suffering and struggling just to get by month to month, and sometimes I myself do lose sight of that. I mean, I'm by far not a wealthy person at all. I I've always been a grinder in my life. I'm a self-employed person. Never really had a 9 to 5 job. I've never had that security of getting a wage or a paycheck every couple of weeks or week or every month. So I know what it's like to really gut it out. And I just wanted to share that because while I was away traveling, it really kind of gave me the opportunity to disconnect from money itself. I mean, I obviously had to pay for things, but I wasn't really focused so much on earning, investing. And it was really nice just to disconnect, spend some time with friends, go see the family, and just really remember what's important in life. Having said that, thank you very much too for the nice words about the operation. I am a little bit scared, I'm not gonna lie. It's I don't know for anybody that's ever been under the knife, as they call it. It's there's always a little bit of apprehension and nerves that go along with that, but I'm sure it'll be okay. And if it's not, it's not. We'll figure it out. But anyway, back to investing. I was kind of thinking about, this whole peer-to-peer lending industry and how focused we are on what we can get from the industry, how much money we can make, how much interest we can receive from making these investments. And one of the things that I think is important to remember about peer-to-peer, if you care about this, I mean, some people really don't, but I personally do, is kind of what are we really giving back to maybe society when we do lend through peer-to-peer. Now, we can always take our money, right, and put it in a bank and get interest. Since these bank interest rates now, let me show you what kind of interest rates you can get at the moment. You're talking about now on a 1 year fixed bond rate, you can now, it's getting over 6%, so 6.01%. Al Rayan Bank, Gatehouse Bank, National Bank of Egypt, Charter Savings, NatWest, etc., etc. NatWest, of course, 2 year, even down to the easy access of rates, if they are going to pop up here, which doesn't look like they want to. Let me see if I can. Anyway, you're talking about 4%, 4.5%. The question being, though, is, when you give your money to these big banks, are you really benefiting society as a whole? Now, what I like about peer-to-peer lending, and this goes aside of the obviously hiccups that we've had, and most of us have had experiences where some of these peer-to-peer lending companies have gone under and really kind of burned us. If we take that away, which obviously has to be taken into account, I think banks in some ways are kind of burning us each and every day in certain different ways, particularly that they can take our money, and they paid us ridiculously low interest rates for a long time, and they don't have to hold any reserves, and they can lend our money out without really holding anything back in their coffers. So if the banks run into problems, we as the consumers are suffering. In the same way that we give them money, they're lending out that money at a much higher interest rate, not necessarily rewarding the savers. I mean, we got banks like Barclays right now. I have a savings account with them, which pays absolutely nothing. And also, if you have a current account that you write, as a transactional account for you, you're going to get 0% interest, which the banks are certainly not doing us any favors. Now, when we invest in peer-to-peer lending, right, we're actually doing something for small business in England, in the UK, which is benefiting the small businesses that these peer-to-peer lending companies are. Some of them turn into bigger or medium-sized businesses, but most of them are small businesses. If we take, for instance, Louis over at LoanPad or Cufflink, they're not huge businesses. They got quite decent-sized loan books. They're employing, anywhere from 9 to 20 people, 25 people. And when we invest through those companies, we're helping those people too. And we're also helping the people building houses out there, which the UK desperately needs. We have a really big shortage of houses in the UK. So we're actually doing some good things with that money. Whereas if we give it to a bank, a lot of the times your average Joe or a builder, small builder, cannot go to a place like NatWest or Al Rayan Bank and get a loan. It's very, very difficult. I don't know if you've ever tried to get a business loan through a big bank, but it's particularly difficult. And peer-to-peer lending really opens that opportunity up to smaller businesses to be able to serve the community, build houses, and do good things. So, this is why I really like peer-to-peer lending, why I think it's really going to flourish over the next few years and going on further than that. I think we've been through the worst of it now. Some of these administrations will eventually wash out. I think some of them are going to take a long time, but I think I would like to say and like to think that the worst of it is really behind us. And now we can kind of focus on these existing businesses that are doing really great things like, Cufflink, LoanPad, Crowd Property, PropLend, Blend, Unbolted, Lend Invest. Yes, I know it's not peer-to-peer, but I still group them into my investment pool. But those companies are doing good things now, and I'm going to continue as long as I see that they're doing the right thing by investors. I'll continue to talk about them and support them because I do really believe in this idea of supporting, small business, small to medium enterprises, and by that it kind of trickles down into other businesses that they're able to support, specifically family offices and family businesses. So that's kind of my little push for people out there that are wondering, well, why would I want to invest in peer-to-peer? Why don't I just throw my money into Tesla or Apple? If you care about that, maybe you don't care about that. Personally, I do. I think about these things. And then on a different level, you have kind of these ESG businesses that care about the environment. So that's kind of another layer of investment, what you can look at where you're putting your money. One thing I did want to say was sometimes these big banks, and I have, definitely no grievances towards them aside of the fact that they pay very little interest to people that have money in things like current accounts. Yes, I know you can get 3 or 4% with these weird rules on current accounts if you deposit this amount of money in, but it's limited to a certain amount. You certainly couldn't dump $100,000 into a current account and get interest on it. They always cap it out at a certain amount, so there's always rules and regs. But if you look at even companies like, Al Rayan, I certainly have nothing against them. It's not because of where they're located or anything like that. But it is good to know, who owns these banks, who's on the board, who's the shareholders. You can see, you got the government of Qatar, who is a pretty big shareholder. It always kind of scares me a little bit when certain governments are big shareholders in banks. It kind of goes against what I believe about sort of this free enterprise of the economy. This is why I really like Bitcoin, because there's not so much of this kind of weird stuff going on in the background. But you can see here even Vanguard is a 2.6% shareholder in Al Rayan. And then, just dig a little deeper into what these banks are all about and what they're up to, and maybe think, where do I really want to support? Where do I want to put my money? And this goes for UK banks, US banks. I mean, in the US, we have some crazy banks. I'm going to show this one to you because I think you'll get a kick out of it. Check this out. There is a bank called the Redneck Bank where banking is funner. But you know what I like about this company? They are, at least very transparent. They also pay 5.3% interest up to, I believe, $15,000 on what they call a checking in America, which is a current account, and you can get 5% on a savings account. So if you live in the U.S., there is some crazy interest rates out there for banks right now. But banking is a little bit of a crazy thing when you come to think about what's really going on in the banking industry. But I digress. I just wanted to look. There's a see that? Save your money. This is a donkey. I think I'm gonna just maybe get one of these bank accounts for the fun of it because I think it'd be cool. Anyway, so keep supporting the peer-to-peer lending industry. I think it's going to do really great things, and it really needs people like us, the retail investors, even though we've been shut out of some of the companies. But the retail investors are really the heart and soul of what made peer-to-peer lending what it is, for better or for worse. I mean, we were supportive. We got burned in some ways during the early days, and we'll talk about that coming up also on what's going on in some of the news. Anyway, let's do a quick hello to everybody here. Paul in Stockport. Sorry, not been here for a few weeks. Paul, we'll discipline you later for that. There'll be no ice cream for you. Welcome back, though. Stephen Hale in Nottingham. Dave Dawson is here. Mike Powell in sunny but pissing it down. Sutton. How is something sunny and pissing it down? That's pretty cool. Good evening from Leatherhead. Peter Vince, Paul Bagworth in Kenilworth. I got to get rid of this redneck bank because it's absolutely so distracting. This donkey right here keeps opening its eyes. There's a fly on the screen. I don't know what's going on there. Look at that. That's very, very disturbing. Let me turn that off. Let me go back to saying a quick hi to Stephen. Oh, thank you for the good luck. Well wishes, Paul, Stephen. Alan Stratford is here. Mark Mason is here. Chimpo Naughty, of course. Darren in a very rainy Cambridge, home of where you can go punting. I understand they have punting gondolas there, so that's pretty cool. Sitting with your imaginary popcorn, watching the show. Yes, welcome. Hit that thumbs up if you can. Perfect. Yes. Anyway, let's go right into a little bit of news, and we'll follow a couple of things in the peer-to-peer world. Let's get off that. Banking. Somo. This is not really a business that I followed very much, but there is a news report about them having a reported rise in profits and turnovers, which, I mean, some pretty big pre-tax profit, which is gross. That means before tax. £6.4 million for the year to 31st of March 2022. Their turnover has gone from 18.9 to 12.9 million. So that's a pretty big rise, certainly a company to pay attention to. They've increased their headcount to 43 staff members, up from 39. 10 new hires in IT. That's a pretty big amount of staff you got to pay there, Somo. But, you know, I ran to their website and I was trying to look at their loan book quickly in their statistics page. So, of course, I clicked on investors and I was trying to look at the results, and this is what I get to. You are not allowed inside to look at those statistics unless you sign up for an account. I don't like that. I have to say, Somo, you got to do better, because I don't want to have to sign up for an account with your company to be able to look at the statistics and the results. Unless I'm missing something here, which I don't think I am, I want to be able to go look at the statistics before I throw some money into your company. So, yeah, not too happy about that. Let's have a look at the rates. So they're lending out about bridging 7.2% a year, which is actually pretty fair. Auction. They have auction financing, business funding, and that is from 7.2%. So not everybody is going to qualify. Well, what do investors get paid? That's the question. Find out more. No, I can't even find out more. I can't even get just basic information without signing up for an account. So, Somo, I'm not too happy about that. I did see one review on here that was interesting. Good rates and good interest rates, but risky. I never did get the £250 promise for introducing others, and some of my current investments have been inaccessible for 2 years due to the property being repossessed. Is that true or not? I don't know. That was written 3 years ago, but every peer-to-peer lending company has defaults. It's just the way it is. Moving on, LendInvest has a new buy-to-let mortgage. As you know, they introduced this £500 million partnership with Chetwood Financial recently last week, and now that allows them to offer buy-to-let landlords financing starting at 5.54%, which is super low for a investment property. Landlords can secure loans up to 75% loan to value, which is good. That just means there's going to be more opportunities for you if you are a LendInvest investor. You're going to see more loan opportunities. I'm presuming that some of those will make it onto the retail market. I don't know for sure how that's going to work. As I said last week, I fully expect eventually that probably LendInvest won't need retail investment money anymore. So if you've got £500 million of money from a company like Chetwood, why do you need my £1,000 or £2,000? You probably don't. But keep an eye out on that. It's good. Also, if you're a landlord and you want to get some financing, you can go to LendInvest and probably get yourself some pretty nice rates on that 5.5% and up for a buy-to-let property. This is good to see. Brian Bartaby, there, Pitcher CEO of Propland, has announced that Propland has reached profitability and increased its revenues year on year. The property lender made a profit of £130,497 in 2022, and that was from a loss of £148 during the previous year. They are very happy about what they're doing. Over there, they funded more than £195 million of loans, with more than 21 million paid back to investors in interest. I mean, get your head around that. They've paid investors like you out there 21 million pounds of money back. That's pretty cool. So it's good to see. I think they're doing good work over there at Propland. Good to see they've reached profitability. I wanted to just log in to Propland since I don't actually invest and just kind of see what's available, because I know a lot of people have said it's quite difficult to get pieces of loans over there. Well, if you go into their Propland loan exchange, you can see here there are quite a few little pieces of loans if you are trying to get into some. Looks like anything from 1,000 up to 5K. There's one for 33K, 46K, with a good amount of months remaining on most of them. Let's see what's pending. Oh, let me log in real quick. See what's on the pending market. No. It errored. Hang on. Let's try again. Why don't you come back? As Paul Young said. Let's try again. All right. Pending loans. So they've got 3 pending loans. 2.24 million, and in funding, nothing in funding. It's nothing waiting to close. And if you want to look at what they've repaid, a bunch of repaid loans, 128.3 million pounds repaid. So good job. Cufflink, yesterday, July 10th, Cufflink implemented the new changes that we talked about the first investment will be a minimum of £1,000. I still haven't gotten clarification about that as to whether that has to be a single loan or whether that can be spread out. I did ask them today because I forgot to ask them about that, but if anybody knows if that is actually a single investment, you probably don't, because you probably already have a Cufflink account. Get one if you don't have one. But I would imagine, if I had to take a guess, that would not be one single investment that you have to put in one loan. It would be spread out. But don't quote me on that, because it does say the new minimum investment requirement for new investors will be £1,000. But it just doesn't really clarify whether that's in a single loan or whether that can be split. I would imagine if you wanted to put that on your auto invest account, you could just put £1,000 in the auto invest and do that. But for those who are selecting investing, picking out their own investments, we need to just clarify. But that did go into effect yesterday on the 10th of July. Let's see what else. Crowd to Fund founder steps down from the CEO as part of a restructure. Again, don't really know much about Crowd to Fund. I've kind of followed them a little bit over the years, but Chris Hancock, who was the founder, stepped down as the chief executive. It's understood that Hancock will remain involved with the P2P business lending platform as a consultant. So I'm not sure if he's just going on to do bigger, better things, or if that's something he's stepping away for some other reason. Did go to Crowd to Fund just to look at their platform statistics. They have an average interest rate of 12%. It's quite a lot. 5.79% defaulted loans, 4.1% written off. So that means 4% of their loans have gotten zero back. 44.6 million investments made, 6.8 million of interest. What I found was interesting here, they have this graph. This goes to show how many investors they have. So they got about, looks like maybe over 520, 530 investors, if that's current. And you can see some here, 40 investors have gotten 100% a net loss. 26, 100% to 90%. 14 with 90% to 80%. So there's definitely been some people that have taken a hit on their portfolios. And there was listed 17 investors that have made 100%, but it seems like the majority are making earnings of 30 to 20%, which is super high. I mean, that's kind of crazy. Actually, so that's a pretty good amount if you can make that. I wonder what if they're making 20 to 30% net earnings, what are they charging borrowers for these loans? Be kind of good to deep dive maybe and find out a little bit more about that. But this down here is a good lesson about diversification when you're lending, not to put all your money into one loan. I think chances are that people with 100% net loss have either just been exceptionally unlucky with the loans that they've picked out, or they more likely have just put all of their money into one loan that has gone belly up and pooed on them, like this 4% of written off loans here. So yeah, and quick note out there, do not put all your money into one single loan on a platform, because if that loan goes bad, you too can be one of this green bar over here on the left. Some interesting graphs and twos here. It's kind of interesting that 9.8% is the target APR, yet this graph is showing these people that have earned 20 to 30%, some 40 and 50%. So maybe that's old data that was from older loans. Maybe they were paying more money. I don't know. We'll see. Maybe this is so this is earnings by portfolio. Is this, I would imagine this is over time, like over the lifetime of their portfolio, not per year, because obviously that many people cannot be earning 30% a year. So I'm presuming this is the lifetime of the portfolio. So there's some people that have doubled their money, which is still kind of amazing. I don't know how you do that in a P2P lending platform, but somebody's done it. 17 people have done it. If you're one of the 17, let me know. Send me an email. Let me know how you did that at Crowd to Fund, because I'm interested. We got a collateral update recently. This is a progress report from the 10th of May 2022 to the 9th of May 2023. And when I first started looking at this, I thought, oh, some of these recoveries haven't actually been too bad. We got 210 loan amount recovered, 212,000. This one, 120,000 recovered on a £105,000 loan. Some of these smaller ones, recovers have been pretty good. Even this £595,000 loan, 720,000 was recovered. And again, just to note, these are before costs. So once you take some costs out, that's probably those numbers don't look so good. But alas, then you start to get down here to some of these bigger numbers. £934,000 loan, only 440,000 recovered. 1.39 million, only 800,000 recovered. 881,000, 600,000 recovered, and 1.15 million, 780,000 recovered. So we're seeing some pretty big negatives there on the big loans. And then, of course, we have to talk about the costs of how much it costs to run these administrations, and particularly in the case of collateral, which has turned more into a fraud case than anything else. Oh, I thought this was pretty funny too. Joint liquidators, Shane Crooks. Sorry, Shane. I mean, you've got a kind of a funny name when you work for a liquidator, Shane Crooks. But if we start to go down and we look at some of the fees that have been racked up, this is kind of crazy. Some of these legal fees, £2.2 million in total fees. Joint administrative fees, we got non-trust 144,000 and trust 443,000, and then down here another 532,000. So we're talking about £1 million in just the trust for the trust and non-trust fees for the joint administrators. So up to £2.2 million in fees, but money paid out is a good. Sorry, it's not 2. Is it 2.2 million fees? Yeah, I think it is 2.2 million. But there is money to be paid out. So the first interim investors declared was 2.03 million. So some people are going to get some of their money back. How much total is there still kind of up in the air? So there is some positives that have come out of that situation. Also, we see Crowd Property raising their rates now up to 10.5% per annum in interest. So they've it says they'll be significantly increasing their rates offered to investors to 10 to 10.5% per annum on projects from this week. So this was announced today on July 11th. With £24 million of new facilities agreed in June and a pipeline of £280 million, we are bridging even more capacity to invest. They got a lot of upcoming projects. They've done 3,000 homes, £700 million of projects funded with £400 million of facilities agreed. The decision to increase our rates again reflects our founding principles, a lean operation that efficiently matches the supply and demand of capital in the lending market for the benefit of all. Our business model means we're able to offer attractive returns to investors while providing essential funding to property developers. So I think this is something that had to be done. We've got to see, if you can get these 1-year fixed rates, now at 6%, these peer-to-peer lending companies really have to step up and kind of offer these higher rates. Otherwise, people are just not going to be that interested. Oh, you can see right now, just on a refresh, now you can get on a 2-year rate if you want 6.6%, which I don't know why you do that when you can get a 6.01% fixed rate. I don't know why here we go. Early access 4.25%. There's Ford Bank. So yeah, Crowd Property doing some things to really make their loans more attractive, which is super cool. I think we're going to continue to see that. I know LoanPad also is putting their rates up. I think it may be in a couple of days. This is an update the LoanPad sent out. They have currently a loan portfolio of 183 loans. They do not envisage any losses on any loans. The average loan size is just 0.5% of your invested funds, providing investors with a well-diversified portfolio. The average loan to value at LoanPad is now just 42%. There's a nice cushion there. The event of any defaults, they've maintained a record of 0 losses and are confident that will continue. We do presently have one loan in default receivership, loan ID 9994199 if you want to look it up. But due to the loan to value, sale proceeds are expected to be significantly in excess of the amount owned. Our lending partners continue to provide us with an excellent pipeline of new loans. We look forward to adding many of these to the portfolio over the coming weeks. Now, as you can see here, July 17th, these rates are going to go up again, and on August the 1st, so another loan increase for all of you LoanPad investors. So 4.8% classic, 5.8% premium. This is the one I use, premium. And 1st of August 2023, you're going to get 6% premium and 5%. So, I mean, this is making it very, very competitive now to use. I don't like to compare LoanPad to a instant access account because it is not protected in any way. However, if you are looking for short-term money, a place to park it, 5% August the 1st, you're going to be able to do that. And we've seen several years of history of no issues when it comes to withdrawing money out of LoanPad. That liquidity does exist if you don't need access to your money so quick. Take advantage of the 6%. 6% sounds a lot better than 4.25% of a access account that you can get in some of the high street banks or Ford Money, Marcus, etc., etc. So good to see that LoanPad is again increasing the loans to become competitive. From time to time, I think maybe 12 times a year, Blend sends these property pulses, which has got some really useful information in here about interest rate hikes. We're going to see that they think markets have fully priced in interest rates for 6.25% for May 2024, with rates expected to stay at 6% or higher until November. I mean, that's kind of crazy if you think about it, because then you're going to start to see these instant access rates climbing over 5.5%. What was very interesting in this report is talking about the new housing pipeline. We speak quite a lot about how difficult the UK housing industry is. There's just a big lack of affordable housing. They're saying here, the Home Builders Federation recently published the Q1 2023 housing pipeline report, and it paints a bleak picture of the rate of housing approvals and confirms that there's a downward trend which has continued from 2022 into 2023. At 3,000, the number of housing projects granted planning permission in the first quarter of 2023 fell by 11% versus the final quarter of 2022. So only 3,000 of new housing projects were approved in Q1 of 2023. And that was a 20% lower decline than this time a year ago. So what does that mean? That means basically that, again, the demand for new builds in the UK is going to be really high because a lot of things are getting turned down, presumed due to various reasons like planning or maybe, probably just the planning department's just putting the kibosh on all these applications that are coming in. It does say that the north was a bright spot. Of course, the north of England is always a bright spot. The north has approved in the northeast up 64%, the northwest 8%, and the Yorkshire and the Humber, where yours truly is from, up 23%. But on the downside, you've got approvals in the east, London, southeast, South Wales, and Wales declining by between 33 and 36% respectively. So that's kind of crazy. I mean, what that does is it bodes well for P2P lending, especially these companies are providing bridging development financing because there is a lot of demand. Even though some of the applications are getting denied, that means there's still a high demand for houses, which means the builders that do get approved and they're selling these houses and renovations and new builds, they're going to fly off the shelves pretty quick, which means that it's a good thing for P2P lending in general. What else? Let's flip to, oh, there's one other thing too. I got this email about a loan update through Funding Secure. And this is kind of crazy if you think about it. This was a loan reference to first charge in Barnoldswick. It's quite a mouthful. As previously advised, there's been an issue raised in connection with the Barnoldswick loans, which have required further investigation and legal advice. After taking legal advice, it became apparent these loans were not first and second charges in the way in which they were presented on the platform. The loan was over a property in some adjoining land. The adjoining land was purchased first using the loan advertised as a second charge loan. The property was subsequently purchased using the first charge loan. The charge registered was an all monies charge and therefore relates to both loans. In the circumstances, we have been advised that the net proceeds of sale should be apportioned as between the property and the adjoining land. Using the purchase values, it is clear that 20% of the net proceeds of sale must be apportioned to the second charge loan. So basically what this is saying is it was misrepresented on the platform, and hence, therefore, years later, now creates a different situation with the payouts. We really have to pay attention to this kind of thing, because a platform that really knows what they're doing, they are not going to make mistakes like this. Mistakes like this really cause serious problems down the road, and ones that can affect how investors get their money back. This just goes to show some of the muddy stuff that was going on in Funding Secure, and how maybe they weren't experienced just writing the correct information for investors to know exactly what they were getting themselves into. And finally, let's take a quick look at the Trading 212 account. Strategy 2 going forward is, I think I've kind of figured out a bit of a strategy what to do if I can get logged in. So you can see we're hovering right under this £20,000 portfolio balance. Not much has changed since last week. I'll show you the balance there so you can see it, 17,938. So I think I'm going to make a gamble on this Canadian Overseas Petroleum. If you look at, and again, please do not do what I do. This is just informational and for entertainment purposes. This market cap of 24.24 million, I think, is extremely small. I think the company is probably worth 20 times that. So this could be considered possibly a cheap company, even though it's very, very risky. We're talking about a share that is 2p a share. So being down 60%, I think maybe the only solution here is just to kind of double in on it, get back to maybe another 20,000 shares and just kind of roll the dice, because I think maybe this is going to do what Calera did. Calera's situation was a little bit different. Calera, they announced a takeover, which made the stock price just rocket. But Canadian Overseas Petroleum, I think, if I had to take a wild guess and look in the crystal ball, which is always accurate, I think this stock will eventually pop. The difficult thing is having the stomach when you've lost 60%, and it's not a massive amount of money. It's £600. I mean, it's significant. To take another 20,000 shares at 2p is not the end of the world. Was that £400? To go in, double down, maybe even double down with another 1,000, and just try to shoot for this and see what happens in the future. I think sometimes risk to reward, there's a certain amount of risk that benefits the payoff, and I think this one, the reward could be really big for the amount of risk that would have to be taken with this company. Aside of that, Norwegian has kind of been chugging along, 22% in the green. Decent, I mean, not really a decent week, but a really good month, 20% up for the last month. Calera still continues to be a bright spot. Flex Natural Gas, It's kind of been middling along, up 3%. Deutsche Bank, we did have some decent banking stocks in the US today, but Deutsche was not one of those that seemed to do well. So they are now 4.3% in the red for the month. And Vermilion, my beautiful Vermilion, just even though it's up 16.9% for the month, just can't get over that red amount of 33%. So I think by the time you see another stream, this Canadian Overseas Petroleum, actually I was going to buy today, but I forgot they are only in the European markets. I believe they close early, so I didn't get a chance to buy it because it's on the UK market. The US market is still open today, so we'll see what happens with that. But in general, the fund, I think, considering where we were, if you remember, this is a £5,000 fund that was started, so way in the positive. But now what we're trying to do is preserve capital and get over that £20,000 hurdle that has been a hurdle for such a long time. Have not been able to crack the 20,000 at all. We got to 19.5 was the most that we were able to even get close to the 20. And then hopefully that 20,000 mark to be able to give Dr. Paula's charity and Forest Home down in Poole and Dorset another donation check to bless them a little bit. So anyway, that is all that I have for you. We've been going 51 minutes. Thank you again for tuning in and spending your pissing it down with rain or whatever your weather is evening here. There will be a new video coming up for Cufflink. I did a tutorial because I get actually a lot of emails about how to use Cufflink's platform. So I've done a full tutorial of how to use the AI, the user interface. Just need to make a couple of edits because of this new minimum investment that's changed, so the video doesn't state that. But yeah, I'll put that up soon enough, probably after I recover from this little op. So Mike says Cufflink's loan does have to be in a single loan. Well, that is good. I mean, that's not good as far as having to put $1,000 into a single loan, but that's good that we can clarify that. JM Roberts is here. Thank you for clarifying that, Mike. JM is here from Toronto. Hello. Darren would love to invest with prop land, but 1,000 min for new loans and parts on the secondary market beyond my pockets and comfort zone. But I thought everybody in Cambridge was like super wealthy, You guys lived in castles and whatnot. Crowd property are doing well so far, but I do worry how much the projects can afford. Okay. Lawrence, don't do it. You're talking about Canadian Overseas Petroleum. I know there are some issues that have been addressed with the Canadian COOP, but COPL. What is the Is it COPL? COPL couple. I know, Mike. Thank you for warning me. I definitely have read some things about that. We'll see what happens. I will read the share profit stuff on it though. So I always like to learn, even if I make a decision and I get it wrong, because I do, obviously. I do like to read and learn, so I will definitely inform myself as much as I can. Maybe I should just buy Lloyd's Bank shares again. Maybe that's the answer. I got to be honest, the stock market is not exciting me at the moment, really much. Lloyd's Bank. Jesus, I mean, look at this. Lloyd's Bank, right? 44p. I think we got out of that at 50p ages ago. I mean, like probably a couple of years ago. So nothing, it's not. Tesla's doing well. Of course, a lot of the tech, the AI, but I think that ship has sailed. So it just becomes difficult. Like, yes, maybe dividend stocks. I don't know. Small companies are difficult to invest in sensibly. I'm very careful with small companies. Yeah, I agree. It's very much a shot in the dark sometimes with these small companies. Anyway, that's going to do it. I'm going to wrap it up. Please come back next Thursday if you're watching this on Catch Up. Thank you for watching. Please subscribe to the channel if you're not subscribed, and tell your friends and family about the channel so we can spread this message to others. Thank you to all the Patreon members. Very much appreciate. Love to every single one of you out there. From a very calm and collected sleeping dog, Holly, and myself. Thanks for all the well wishes tomorrow. I will be having the best sleep in my life, taking care of some medical stuff, but back next Thursday. Appreciate you all. Have a great evening. Enjoy your weekend, and hit that thumbs up before you leave if you can. Thank you very much. That's all I got for you tonight. Take care.